Hello traders, welcome back to the Forex Geek where we dive deep into the tool that can help you make smarter trading decisions. And in today's video, we are going to be talking about a powerful trading strategy that combines the clarity of the Renko chart with trend following capabilities of the Donchian Channel. This unique approach can help you cut through market noise and identify high probability trades with greater precision. So by the end of this video, you would have a clear understanding of how to set up and use this strategy effectively. So stick around with us until the end to learn how you can enhance your trading skill and potentially improve your results in the market. We start by understanding what the Renko charts and the Donchian channels are. The Renko charts are a unique type of chart used in technical analysis. They focus solely on price movements, ignoring time and volume. This is achieved by plotting bricks that represent fixed price changes, which help filter out minor price fluctuations and highlight significant trends and support and resistance levels. While the Donchian channel are technical indicators used to identify trends. Turning this indicator on, this is how the indicator is. They are used to identify trends, potential breakouts, and volatility in the trend in the market. This channel consists of three lines, as you can see: the upper band, the lower band, and the middle band. The upper band being the highest high over a set period, while the lower band being the lowest low over a set period, and the middle band being the average of the up and lower band. The upper and lower band, this is what the middle band is about. So let's see how we can form a strategy or how we can trade using the Renko Donchian Channel trading strategy. This strategy combines the clarity of the Renko chart with the trend following capabilities of the Donchian channel to identify high probability trades. Here is how you can implement this. The first step is to set up your chart, which we have already done. You set up your chart, you set up your trading environment with your Renko chart. If you do not know where your Renko chart is, you come to this area on your trading view. You scroll down till you see your Renko chart and you click on your Renko chart, and this is how it appears. Then you apply your indicator, your Donchian channel. After you apply it, you apply the Renko chart to a preferred time frame. This is my 1 hour time frame. This will help you focus on a specific price movement and trend. Next, you add your 20 period Donchian channel, the channel indicator, to your chart. This provides you with a dynamic support and resistance level. Finally, include the awesome indicator for additional confirmation of your trading setup. You can see this is the 20 period for the DC indicator, the Donchian channel indicator. Then we'll add our awesome oscillator for additional confirmation. This is how we set up our chart. The second step is to identify your potential trading setup. You identify the potential trading setup is crucial. For a long position, you wait for price to touch the upper Donchian channel. This indicates strong uptrend. Then you look for a pullback to the middle and lower channel before you enter your potential buying opportunity. So you have to confirm your setup with the green awesome oscillator bar above 0. Now let's see how we can apply this. When price is at this area, price is at the upper band, we wait for price to come back to the middle band to retest. When price has retested at the middle band, you will confirm using your awesome oscillator to see if it is showing a series of upper band above 0, and as you can see the upper chart, the upper bars or the upper bar, oscillator bar, which is above 0, indicates bullish sentiment. So when price has come to retest the middle bar is where you would want to enter your trade. You enter at that area. Now for a short trade, you follow the same procedure, you follow a similar procedure. What you need to do is, first of all, you wait for price to touch the lower band. When price touches the lower band, at this area you can see price touches the lower band. When price touches the lower Donchian Channel band, it indicates a downtrend. Then you look for a pullback to the middle or the upper band. So you look to the pullback to the middle band or to the upper band. When you see the pullback, this would signal an area for you to enter. Then you enter the moment price start moving again after the pullback. Once price has started moving again after the pullback, this is where you want to enter your trading opportunity. And you have to ensure that your entry aligns with the overall trend indicated by the Donchian channel. And as we can see, the trend is trending to the downside. It's trending to the downside, making series of lower highs and lower lows. That's why this trade is a valid trade. You can also use this area as a good signal. At this lower band, you wait for price to retest. At this lower band, you wait for price to retest the middle band or the upper band. Once price start moving away, ideally after 2 red blocks, you would want to enter your selling position. You place your stop loss just above the upper band and you would ride this trend to the downside. Let's not forget, we have to talk about where we place our stop loss. You set your stop loss below, in a buy trade, you set it below 2 to 3 Renko brick blocks. This is where you set below 2 to 3 Renko brick blocks. So 1, 2 is okay. You can set it at that low after the 1, 2. Then in a sell trade, you set it above after 2 to 3 Renko blocks. You just set it above 2 to 3 Renko blocks from your entry. This is where you set your stop loss. Remember, you have to ensure your entry aligns with the overall trend. Now, this place we drop our stop loss helps us to protect our position from significant loss. For your take profit, we have to consider using a trailing stop by moving our stop loss in favor to lock in our gains. Additionally, you might want to take partial profits at key levels to manage your risks. So you can take partial profit when price gets to the lower band or when price moves a certain distance. You just decide to take partial profits, or you can go for a fixed risk to reward of 1:2 for you to take your first partial profit and you allow the rest to run. Or you can equally use a trailing stop by putting your stop loss above your profit and following price when price moves in your direction. This is how to manage the trade. You can also set your stop loss, your profit, your take profit to key support or resistance level. Like at this area, I can set my profit at this resistance level. When price reach the resistance level, I would want to leave the chart. I would want to leave the trade. And for this selling trade, for this bearish trade, you can set your stop loss far, your take profit far beyond an area, this previous support region. I just marked out a previous support area, and this would have been a very good place to take your profit on either trades. This is how we use our stop loss and take profit. Our step 5 is to manage the trade. As trades progress in your direction, you continue to monitor your Donchian channel for any change in the trend direction. If price breaks through the upper band or the lower band, it may signal a trend reversal. Consider trailing your stop loss as the trade moves in your favor to log in gains. Additionally, you might want to take partial profits at key levels to manage your risks effectively. Alright traders, we have come to the end of this video. Engage with us in the comments below. We want to hear about your experiences. If you found this video helpful, do not forget to like, subscribe and turn on the notification bell so that you will never miss out on more trading tips and strategies. Thank you for watching, and I will see you in the next video.